This is the Daily Market Comment for Wednesday, December 1st by Mario Setikyriakos. I'm Christina Marujos, and thank you for joining us here at XM.com. The chairman of the Federal Reserve dropped a bombshell on global markets yesterday by signaling his central bank will consider accelerating the pace at which it withdraws liquidity from the financial system. Testifying before the U.S. Senate, Powell stressed that inflation risks have intensified and that incoming data since the last FOMC meeting point to a rapid improvement in the economy. He also downplayed the Omicron variant as being a mere risk at this stage and explicitly said it could be appropriate to end asset purchases a few months earlier than planned. Barring some catastrophe in Friday's jobs numbers or next week's inflation report, it seems like an acceleration of tapering could be announced at the next FOMC meeting in mid-December. Markets reacted quickly. Fed futures contracts are currently pricing in 2 rate increases for next year and even odds for a third one starting in June. Yet the dollar was not impressed. The reserve currency spiked higher initially but soon surrendered all its Powell-related gains to close the session in the red overall. It's difficult to say whether this was because of a relief rally in the euro as oil prices plunged or whether month-end flows simply eclipsed everything else. Either way, the bigger picture for euro-dollar remains grim. A barrage of economic growth downgrades is likely imminent, with restrictions returning across the eurozone, while in contrast, the American economy is booming and there's still room for markets to fully price in a third Fed rate increase for next year. There has been no shortage of volatility in stocks lately, but for all the recent headlines, the S&P 500 is only 3% away from its record highs. The market is essentially being held up by a handful of tech heavyweights. There has been a clear rotation to quality lately, with unprofitable growth companies and small caps getting blasted, while titans like Apple continue to forge ahead, carrying entire indices on their shoulders. In energy markets, OPEC will begin its 2-day meeting. With concerns that Omicron will hurt demand and several nations releasing strategic reserves, the cartel has the perfect excuse to hit pause on its plans to steadily raise production. If so, that could bring some relief to oil prices. Thank you for watching today's Daily Market Comment here at XM.com.